So, internal range liquidity. Now, this is probably a term that you've come across before, but maybe you're just trying to understand how we can actually use it to our advantage. Now, the first thing we must understand before actually identifying how to use it and how to actually profit from it, we need to understand how we can actually identify it. So, the way we identify internal range liquidity is first of all, we understand where the range lies. So, within this particular example, we've got AUD/USD on a 30-minute time frame. First of all, we understand how to actually pick out our high time frame market structural highs and our high time frame market structural lows. And in this particular example, I've highlighted it using the points of interest right here. So we've got the blue boxes to identify the market structural highs and also the lows. And within that, we've got our internal range liquidity resting above these secondary areas of structure. And that's the main way that you understand this. Look for these secondary areas of structure as we're moving to the downside, for example. In this particular example, we're looking for sells, right? So what does this actually mean? Above these areas of secondary structure, we are always going to get a level of liquidity. So as you can see in these particular examples, what this means is if price decides to have more of a major pullback, these areas of liquidity are going to get swept and potentially broken through to the next level as well. So how do we actually use this to our advantage? Now, first of all, we've identified our internal range liquidity. Our second part is going to understand how are we actually going to enter from this. So for me personally, I would start pretty much identifying our supply zones since we are looking for sells. And in particular for me, these two areas would interest me. Now, since I am entering using confirmations, this particular first area, as you can see, I would not have entered. And as you can see what prices actually happened, it's actually taken that liquidity resting above that secondary high. Now, when we're taking a look at our area right here, what can we identify? Well, we know now that a lot of this secondary or internal range sort of liquidity has already been swept. We expect that because we are in a downtrend, this high is still going to be respected. So what does that mean? Now that we've taken multiple areas of internal range liquidity, eventually we are reaching that premium supply zone. So therefore this must be respected. Now there's two scenarios here. If for example, all of this has been respected and therefore we get to this supply zone, get some kind of change of character on the lower time frames over here, we now know that potentially we could look for price to continue to take these significant lows down here. However, if this does not happen and price actually decides to just break this liquidity up top and have a clean closure above, we know now that our market structure is actually changing. Therefore, looking for sells is not the most ideal situation. So what are we saying here? If internal range liquidity is, for example, taken and we are still respecting our premium supply zones within the sell area, we know that we are pretty much primed to look for more sells. So in this particular example, what did we say? We're looking for sells at this kind of premium order block right here, break down below, and then eventually your take profits would be at this kind of zone right here. So let's just say even if you are entering on a limit, something like this, and then you would aim for pretty much the low down below, because we know that market structure is actually intending to go in that direction. And as you can see, playing price just a bit further, as it continues downwards, and there we go. Eventually price takes the low, and that's this move completed. So just a few key lessons about understanding internal range structure and internal range liquidity. Very, very important, because some traders, they think that, okay, once we've broken this area right here, we can now start aiming for buys, all the way up top. But no, this is something that we need to understand. We need to understand that there's areas of primary structure that need to be respected, and there's areas of secondary structure that don't need to be respected. Therefore, what happens is, this is the situation where we actually start to get that internal range liquidity that's eventually going to be swept. What is important though is that these premium order blocks or these premium supply zones in the sell move are still respected. If they are not, and if price actually breaks above and closes above, therefore we know that we are now looking for buys. So guys, I hope this was a quick little lesson for you all. Please like, subscribe. Now we're doing more of these short form videos, and hopefully they're coming into good use. So guys, take care, and I'll see you all in the next one.